So if you wanted to become an even better investor, it actually makes sense to study some of the best poker players. And that's because there are a lot of commonalities between the two activities. I speak from personal experience, having been married to a professional poker player, and today I'd like to share with you my 5 top tips from playing poker. All this coming right up. Hey there, this is Tom Young with Journex, bringing you the tips and tools you need to master personal finance. And we do a lot of tutorials just like this one. And so if you're new to this channel, consider subscribing so you can stay updated. Today I'm actually joined by Jeffrey, sitting back there. He might pop in and out of the video screens, but don't worry, I'm going to take him for a walk after this video. Now, if you're watching this video, you're probably looking to become an even better investor. And it turns out that by studying the best poker players, there are a lot of lessons that we can learn. Today, we're going to cover the top 5 things that we can learn. The first tip: it's not hard to be above average, and you don't actually need to be number 1 to still do well. So the very first time I went into a casino to play poker, I was actually really nervous. And that's because I had only ever seen professionals play. And this is like if you're watching the World Series of Poker on TV, you're really watching the cream of the crop duke it out. And that was kind of my expectation too for going into a casino to play. In fact, it turns out that the average poker player is actually kind of average. And that's actually not too surprising. People come from all walks of life, and it actually doesn't take that much to become just a little bit better than average. Because it turned out that even just learning the rules and knowing how to play just a little bit, I was actually, to start, kind of average as well. And we're talking about Texas Hold'em, by the way. There are a lot of other variants, but in this case, we're talking about Texas Hold'em. With stock investing, it actually runs on the same principles. Let's take a quick step back and understand, first of all, it's actually not that hard to be average as a stock investor. A good quote by Bert Malkiel is, "A blindfolded monkey throwing darts at a newspaper's financial pages could select a portfolio that would do just as well as one carefully selected by experts." And what he really means by that is, a monkey throwing darts at a dartboard, you're going to be picking out pretty much the average, a random sampling of stocks. And that would pretty much do as well as the market average as long as you're throwing enough darts. But imagine for a second, you had 100 darts on the board and you were able to remove just one. Now, there are, let's say, 50 companies would outperform and 50 companies would underperform. You only need to select that one dart out of 50 that would underperform. Could you do that? And if the answer is yes in any way, congratulations, you've outperformed the market, even by just a little bit. And the other thing to remember as well is you don't actually have to be number 1 to do well in either poker or investing. When we take a look at the winners of the World Series of Poker, these are actually the number 1s in the field, but you don't actually have to win the $1 million tables to do well. Because even as an above average player, it's still easy to go into a casino and earn, like, let's say $1,000 at a smaller tournament. Just the same way with investing, it's still relatively easy, as long as you're doing just a little bit better than everyone, than the market, to really justify being an individual investor. So my second tip from learning from a professional poker player is that rules can help you succeed. And rules don't even have to be perfect to work well. So in poker, one of the things that surprises most new players is that the majority of money is actually made pre-flop. And so basically, you don't even see the 3 cards put on the table yet. And that's because a lot of betting already takes place then, by following a couple simple rules there called basically game theory optimal rules. You can actually do a ton better than everyone else out there. Now, game theory optimal isn't foolproof. It doesn't even mean it's optimal, because I think poker as a game hasn't actually been solved yet, but it's game theory based. And so you're really following certain rules that make it very difficult for people to figure out if you're bluffing or whether you have good cards. And in general, it actually performs frighteningly well, especially against decent tables. It won't win you the World Series of Poker. It's generally pretty good for consistent winnings. Like, you can go into a casino and still do pretty well. It's the same thing for investing. This is one of the things that I tell all of my viewers, all of the people I advise. Investing rules might not work 100% of the time either, like no machine or equation has solved investing yet, but following a few simple rules can help you do really, really well for the long run. And like I've put down 3 rules over here. There are many more that you can follow, but these are the ones that are absolutely essential, which is to favor high quality companies in great industries with great outlooks. Don't invest in companies run by crooks. That sounds kind of obvious, but a lot of people go against that advice. And the third one is don't overpay for investments. Now, these rules might seem so simple, but in practice, they are so difficult to stick with. And that's because it's often the case where we'll see a stock or an investment just come by that looks kind of okay-ish. And we might lower our standards and say, you know what, it's okay, let's just invest in it and see what happens. And oftentimes those are the biggest mistakes that you can make. Number 3, the third piece of advice from a professional poker player is learn to control your emotions. Now in poker, there is something called tilt, and that's what they call a state of emotional frustration, which is often caused by losing money. Basically, you lose your cool and you start betting like crazy just to get your money back or because you're angry. And that's actually extremely common in poker playing. In fact, it actually causes people to bet more aggressively, very consistently actually, and it's an overall losing strategy. It's actually very easy too to find people at tables who are on tilt. Like it's really easy to identify these people actually. So here's that great piece of advice. Don't do something permanently stupid just because you're temporarily upset. And with investing, it's exactly the same. Don't let anxiety get to you. This is true for both day traders or long-term investors. If you've had a bad day, or even as a day trader, say, or maybe even a bad year as a long-term investor, don't start making bad decisions just because of what happened yesterday or the day before that. One way you can think about it that helps a lot in poker and in investing is that your money has no memory. So even if it went up by a lot or down by a lot, that next hand that you play or the next investment that you make, your money doesn't care where it came from. It just matters that you have that money there at that point. So just step back, reset, and that's a great way to calm your emotions down. So the fourth tip that I have is to understand that bad outcomes doesn't mean it was a bad decision. Let's take an example from poker. So imagine getting dealt pocket aces in Texas Hold'em. And from this graph, you can actually see that you have an 85.3% chance of winning against another player if you're playing heads up. Now, imagine that person pushes you all in, and it turns out that they have a 4-7 offsuit. Do you fold or call? And the answer generally is that you should call. And taking a look at the odds, it turns out that you have an 84% chance of winning in that case. So your odds of winning are actually pretty good with pocket aces against 4-7, and that's not that surprising actually. So now imagine that the flop comes and it's a 5-6-8, and so your opponent actually gets the straight. And so you actually need 2 aces, one on the turn and one on the river, to actually win. And so it turns out that, let's say your opponent won in this case. Did you actually make a bad decision for calling? And the answer is no. You should have called him because there was a pretty good chance you would have won. So it turns out investing in stocks, it's pretty similar as well. You really shouldn't beat yourself up for making a decision that was right at the time, but it might not have had a good outcome afterwards. Let's use an example actually of Amazon. So on the left here, we see Amazon stock after the .com bubble. It basically, the price of it got cut in half in about a year or so. So even if you made a good decision at the time in like say 2002 or 2004 and recognized that Amazon was a working business model, it would have taken years for you to actually see returns. You would have languished there for quite a while without really knowing whether you made the right choice or not. The fifth investment tip from a professional poker player that I have is that you need to have some fun as well. And it's not just about being lovey-dovey and everything. You actually need to have fun to succeed because investing and poker playing are both long-term games. You actually need to have patience because everyone makes mistakes. Everyone starts off as a novice, basically. And it takes time, not just luck to do well in the long run, but it takes a lot of time and work to build the experience that you need. So basically, the more fun that you have doing it, the more patience you'll have as well. And that'll be great because there are just so many rules to learn that if you can obsess about doing well as an investor or doing well in poker playing, you're going to be the one to have the patience to learn everything that you need to know to do really, really well in either of them. And so there you have it. All beginnings are hard. There's a picture there of Warren Buffett, famously titled Tap Dancing to Work, and that's a quip by him saying that unless you're really tap dancing to work, unless you're really enjoying your work, then what's the point of doing the work? So what if you don't actually enjoy investing? Because with poker, it's simple. If you don't enjoy playing poker, just don't play it. But with investing, it's a little bit more complicated because everyone does need to invest for their retirement or for their savings or for college or something like that. And so if you don't actually enjoy investing, there are 3 alternatives to it. There's passive investing. So basically you can just assign to target date funds. There's something called what I call set and forget, which is more or less when you could just spend a decent amount of time opening up an account with Vanguard, selecting a couple ETFs, like low-cost ETFs for long-term investing, and then just forget about it. Basically, anytime you put money in, it just gets diverted into those funds, and you don't have to think about investing at all. The third way out, if you don't actually enjoy investing, is to actually hire a financial advisor to help, and that can actually work in 2 different ways. First, they can actually do everything for you, so you don't have to worry whatsoever about investing at all. Or the other thing, and this is even actually my a way better way, I think, is that they can actually help you get interested in learning how to do it. Because a lot of people who don't like investing, they don't like investing just because they either don't understand how to do it, or they might have just not done that well in the past. And even just a couple failures in the beginning makes you think, well, man, maybe I'm not cut out to be an investor. That's absolutely incorrect. Anyone can be an investor. Anyone can be a great investor, in fact. And all it might take is just that inspiration, that person to help show you that it's actually not that difficult. So there you have it, my 5 top investment tips from a professional poker player. I hope you've enjoyed this video, and if you did, don't forget to subscribe. It looks like it's time for me to take Jeffrey out for a walk, so I guess I'll see you guys next time.